Hi, good morning. So I have a couple of challenges today. The first one is, this is Miami. Yesterday was Thursday's night, so I assume that a lot of you had a lot of fun, so my challenge is to keep you awake. And the second one is to ensure that you get some of the ideas that we got from the insights of having done a very extensive global study that basically is telling us how to shape the future of financial services, user experience, and client experience. So there are a couple of things that are important to put in context. The first one is, when I characterize the level of demand of a financial services user in Latin America, I characterize it as very low. And why is it very low? It's very low because the way that we are offered financial services in most of our markets is very precarious. So the reason we are all here is because we're here to learn what's the next step, how can we improve, and how can we, change the status quo. And why do we do that? Because the user experience in Latin America is usually, we don't demand more because we don't know more. But, for instance, my 15-year-old son is here somewhere in the audience, and he's demanding. He has not used financial services yet. But his standard of service, as it has been said ad nauseum over the past day, has been his experience with the apps, with Facebook, with Amazon, with Apple, etc. And when he joins the tons of people that are going to go and get services from a financial service institution or a fintech, he's going to demand the same experience, if not better. So the ground has been set by all those big tech companies. The second part is that when we think about financial services and the experience of the user in Latin America, we do see some highlights of what the future can hold. So let me begin with that. Okay. So we ran a study, which is 47,000 people across 28 markets. Of those markets, most of the most important Latin American markets were present, with over 9,000 people responding. So no matter how do you look at it, the study is statistically significant in pretty much every one of the segments that we studied. When you try to put 9,000 people together and 47,000 people together, you begin to see patterns emerging. And we saw those patterns pretty much being grouped in 4 kinds of personas, o perfiles, como se le llama por los mercadólogos, ¿no? Personas, as the mercadologists call them. The first one is called the pioneers. Pioneers are people that are technologically savvy, they are welcoming of new risks, and they are very hungry for innovation. So this is primarily a young segment, and it represents around 23% of the people that we survey. The second one are the pragmatists. The pragmatists are more ubiquitous. They are more mature, more savvy about how they use financial services. They pretty much don't care about the channel they use. They feel comfortable, of course, using technology, but also going to a branch, also using a call center. Then you have the skeptics. The skeptics are a tough bunch. These are the people that have been inoculated from financial services by years and years of terrible service. But they are also tech-wary. They are not so sophisticated in that sense. And they are, to some degree, dissatisfied. And the last one are the traditionalists. The traditionalists are primarily people above 55 years old. They are technology adverse to some degree, and they prefer the human touch. So pretty much the distribution globally that we have for these segments is 23% for the pioneers, 23% for the pragmatists, 33% for the skeptics, and if I'm not wrong, 21% for the traditionalists. When we look at the contrast of the global sample against the LATAM sample is pretty much respects the distribution of the global sample, except for one interesting thing. The skeptics only represent 6%. And this tells us a little bit about the demands, and where does that 6% shift to? It goes primarily to the pioneers. So we have a population, a demographic that is pretty much larger in terms of the demands and of the expectations, such as the one that my son will have, around what are the experiences or the expectations on the experience of the LATAM people in this sense. We identified 5 patterns, and those 5 patterns are what pretty much we believe is going to be governing the trends on the next few years. Let me talk about each of those 5 in detail in a few minutes, but it's basically what is going to guide us through the rest of the presentation. The first one is, there is an implication. The implication is that users expect the financial services institutions and fintechs to be part of an ecosystem. Nobody wakes up in the morning thinking, what mortgage will my bank offer me today? Nobody thinks about that. They think, I want to buy a house, I want to buy a car, I want to buy a washing and a dryer machine. And what I do expect is that the experience of buying end-to-end, point-to-point, encapsulates all the experience, including the payment and the financing experience. So what this means for us, and it was said yesterday in one of the presentations, this is going to create a couple of models. The model of the utility bank or the utility financial services company, which is going to provide the backbone, or the second model is one that will basically generate the integration of ecosystems and integrated of value offerings to capture all the value in the transaction and not just the processing of the transaction. So what this means is that the challenge for us is, if the expectations of our users is to be part of an ecosystem, what this means is that we need to govern this ecosystem, or we will only be left, providing the basic services and transaction services for that, rendering our profitability to the lowest part of the value chain. So that's one of the first expectations, and it's one of the ones that needs to be taken very, very seriously from all of us here. The second one is, there is appetite for personalization of services. So yesterday we heard a lot about the fact that users are expecting a lot of new services, a lot of new offerings, etc. Today, the technology, the data, and the user attitude is permitting that we can create markets of one. And by markets of one, we've heard this concept for 20 years, 25 years now. But now is possible. Why? Because the technology, the data, and the tools are there. There are many, many tools right now that can allow you to pretty much create a product and a fee factory for pretty much every single segment, or even every single client that you have in your institution. And it can be done automatically, it can be done immediately, and it can be done really effortlessly, applying artificial intelligence, machine learning, and everything that we have out there to make decisions in microseconds. So you can basically tailor a credit card for the person in the 5th row, in the 5th seat, that adapts to his or her personal conditions, such as rates, such as payment terms, etc. You can actually do that automatically. The question is, are we doing it, and are we taking advantage of it? So what this means is that if you look at this graph, and I don't expect to look at the detail, that you can look at the detail because it's very far away in some instances, but what you can see is that the first 3 bars belong to the pioneers, to the pragmatists, and the skeptics. Those compose pretty much, as we say, 94% of the sample in LATAM. And if you can see, the lowest number in any of those bars is 54%, 53%. So what this means is the majority of this 94% of our market is actually expecting that we can provide them with new services, that they can receive offers and alerts and advice through the diverse channels that are tailored to them specifically with the information they give us. They expect in insurance, particularly if there are people from insurance companies here, they expect personalized insurance that are done according to their usage and according to their own way of life, and not the things that you have on the shelves in your insurance company that only you can offer to them. And also, they are interested in savings and also understanding what financial instruments they have based on their own spending patterns, which you are all able to understand and to know. The third key trend that we found is that they are willing to share data. And this is very important because they understand that to receive, they need to give back. And they know that they have all this data. They understand, many of them, that their data has value. And the data has value for the financial institution as much, in some instances, as the monetary assets that they hold with that particular financial institution. So when we look at this, if you point at the first column, the purple one, it's about the attitude of the pioneers according to data sharing. And if you see, they are pretty much overwhelmingly disposed to, in disposition, sorry, to share their data and to do whatever needs to be done if they can get a good advice, etc. So if you look at some of the things that are important, for instance, in the fifth line, it says they are willing to share data to receive discounts on non-insurance related products and services. They are willing to share data to receive more competitive and lower prices. So if you can integrate all of this in your ecosystem, going back to our first trend, and enabling offers that go end to end, and you can use the information they provide to you so that you can make proper decisions about the offers, they're willing to listen and they're willing to take them because they will understand that it's done for them and it's not done massively. So you have a great opportunity. And the question is, are you engaging your customers this way? Are you engaging your IT areas to build the tools and the channels and the throughput of information that you need to make these decisions and these adjustments in time? The fourth implication that we look is the integration of physical and digital. Let me tell you something. In Accenture, we recently bought a company, a UK-based company called Allen International, which are the preeminent firm in designing branch experience. And the way that it has been transformed once we got together is that we basically are integrating. Physical cannot be longer seen as just a standalone channel, whether it be a branch, a call center, or a contact center, but it needs to be integrated seamlessly with the digital experience, with the mobile-first experience. So basically, every branch design that we are doing for every major bank in the world right now is being considered in light of the combination and convergence of the experiences between the physical and the digital world. And why is this? Not sure who has been to Amazon Go, either in Chicago, Seattle, or San Francisco. Anybody raise their hands? Who has been to an Amazon Go store? Not many hands out there, a couple of hands out there. I've been there. It's pretty impressive. So when you buy at Amazon, basically the experience is seamless. You click, you put one click buy, and then pretty much in a few hours, in a couple of days, the product is at your doorstep, okay? Amazon Go, you enter into the store. It's a small store. These are pilot stores yet, but they are full with cameras, and they are detecting everything you do, everything you pick. You don't even need to do anything. You don't need to even talk to a human individual in the store. And the experience is seamless. It's like if you were buying online, but physical. So what Amazon did was integrate the digital experience into a physical channel using all kinds of digital gadgets. So that's what experience means and the integration of physical and digital means. One of the things we're looking is that this implies and this entails that most of you think about the physical experience in one end, but the digital experience has to be also done and accompanied by open banking and everything that an API can do to integrate not only your services, but also the services of third parties that are needed by customers. And finally, the other trend and the other demand that we're looking is that customers expect trust to be preeminent, to be present in the interaction with their financial services companies. And trust goes both ways. The first way is the trust in the financial advice that they will get, whether it be from an agent, from an AI agent, from a chatbot, but from the institution that is behind that advice. The second part of the trust belongs to, if I'm giving you all my data, I want you to care for my data as much as you care for my monetary assets. So what that means for us is that we need to establish very well the perimeters of trust and the standards of advice and of trust and of security that we have in our institutions so that we can safeguard both the advice, but also the assets, data, and monetary of our clients. Lastly, one of the things that we are looking at is that when you put everything together, what this means for us is that we need to stop becoming static businesses, only providing or being intermediaries in finance, to become a greater part of the lives of our customers. So what this means is that banks and insurance companies need to turn themselves into living businesses by precisely implementing these ecosystems, to some degree trying to govern these ecosystems to grab the better part of the profitability that they can hold for you, and to basically provide new experiences, personalized experiences to each one of your customers. So the five steps banks and insurance companies and fintechs can take out of all this insight that we gathered are the following. The first one is, again, expand your business models through ecosystems to offer not only financial services, but to integrate non-financial vendors to provide an end-to-end experience. Offer personalized experiences to personas, but moreover to the persons behind those personas. The capabilities, the technology, and the processing power is there. The question is what are you doing with it, and if you have it ready, and are you investing on it to get it right. The third one is receive personal data in exchange for advice and better terms. What we're saying here is that the providers should work very, very hard to identify what is the value that their customers are going to be getting for the data that they are giving back to us, and how do we translate that data into meaningful experiences and offers for them. Full integration of physical and digital, as we mentioned. These are the cornerstone of an end-to-end experience across all our channels, because in Latin America, physical is still going to be a very, very important means of connecting with our customers for the time being. Even though the trend is to, rationalize the use of branches, I don't see that happening, at least for the next 10 years, because there is a lot of need for inclusion, and there is a lot of need for personal touch for those who are still not in the very immersed in the financial services world. And lastly, is how do we anchor trust across all touch points in the whole value chains that we are creating across the financial services end-to-end spectrum. So those are the 5 things that I wanted to share with you today. I hope these are useful to you as you reflect on the next steps that you're going to be taking, and as you reflect in all the advice and in all the perspectives that you're getting from this conference. Because we do have an opportunity. I do believe that our market is poised for explosive growth. We have a demanding population that is going to know more and know better, because their standards are already being set, not by you guys, but by other companies that are not operating in your markets, and that could possibly will if we don't do something quickly and swiftly. I encourage you all, if you can take a picture of this, to go to the link and download the study. The study is very comprehensive, has a lot of data, has a lot of information that will certainly help you do and make decisions in your day-to-day business as you engage your customers to create true experiences and new experiences in this very, very challenging world. Thank you very much.